Hello, good morning and welcome to this edition of Buy Now, Sell Now right here on ET Now. I'm Cheryl D'Souza along with Karanya Rao. And Karanya, nothing to complain about for the markets today. 11,400 on the Nifty.
Absolutely, good gains coming in as far as D Street is concerned. But let's run you through quickly with all the headlines that one needs to keep on their radar. Of course, the markets being very, very resilient is something that we would like to start with. Meanwhile, the street is also awaiting auto sales data. We had Maruti, Bajaj Auto, Escorts numbers already trickling in. And in fact, the markets are largely quite delighted over what they've delivered so far. But let's see how the rest of them turned out. Restaurants and cinemas are going to be open from the 1st of October, the first week of October, with some guidelines which have been issued by the government as part of unlocking 5. So let's see how that plays out. In the meantime, you have stocks of multiplexes flying away in trade. Talking about some stellar debut on the Lal Street, you had CAMS and Chemcon both listing, and both were largely and highly oversubscribed and have seen a fantastic debut, especially Chemcon. Silver Lake looking to invest additional 1,900 crore rupees in Reliance Retail, another big headline that we're tracking this morning. And finally, you have BPCL, which fell about 10% as the deadline extended for divestment, or rather for expression of interest till November 16th. Of course, the stock has made a good rebound in trade today, but yes, it was big loser in trade yesterday. Some recovery seen from those levels, but not quite enough for us to call it a comeback yet. Let's keep it with the markets then. You have the benchmarks, which are relatively underperforming the broader markets, which are relatively underperforming the benchmarks right now. There's the mid-cap index, which is up 0.7%. Exactly same quantum of gains coming in for the small cap index as well. Sensex, look at that. Meanwhile, up 570 points, trading firmly above 38,600 mark. You have Nifty just above that 11,400 mark. All the sectoral indices are firmly in the green as we speak. As far as the outperformers in trade today are concerned, you have a Nifty Bank up almost 3%. Nifty Media is up 3.5%. Of course, this is on back of that news development that we just flagged off in the headlines. Private sector lenders are also doing very well. The index is up 3%. Nifty Realty, Nifty Auto, all of these sectors actually are shining away in trade. There's only IT index and Nifty FMCG, which are relatively, Nifty Pharma, which are relatively looking lackluster, but nothing to complain really, Cheryl, at this point in time. All of them are logging in good gains.
Definitely, Karanya, nothing to complain about when you look at today's market movement here. But we had a very big exclusive interview with Rakesh Jhunjhunwala today, and he's sounding ever bullish, and optimism is the most important for an investor. Is one of the key takeaways that's coming in from Mr. Rakesh Jhunjhunwala in today's interview. And what are the other things that he highlighted? It's on your screen. He's saying that everyone will be surprised by the recovery as well as the growth in India. He's saying that India will be able to sustain the higher growth momentum going ahead. He's also saying that we feel, and he particularly feels, that we are seeing a classical birth of a new bull market. He also continues to be bullish on growth due to combination of factors. Mr. Jhunjhunwala also pointed out that India has all the ingredients for a pickup in the manufacturing capex. He's also saying that golden years for India are most likely ahead of us. He's saying that the post-clarity on the NPA issues, we will likely see the banks come back and there will be outperformance from that particular sector. On pharma, he's saying that he expects the pharma sector rally to get bigger from here on. Also, he's saying the emphasis on cash flow management across the Tata Group is higher as of now. Also, earnings growth for Indian IT companies at current size is phenomenal. And lastly, talking about real estate sector, he's saying the real estate prices may have bottomed out. So these are the top takeaways coming in from Rakesh Jhunjhunwala's interview only on ET Now. Karanya?
Well, let's proceed further with BNSN, shall we? And before we bring on board our guest, here's a quick tease of our quiz of the day. Every day we've been interacting with our viewers on Twitter. We've been posing them some exciting, intriguing, stimulating questions. And today's question is, which of these stocks has the highest number of buy ratings from brokerages? The options were A, ICICI Bank, B, Airtel, C, SBI, D, IndusInd Bank. So those of you who've just tuned in or who've started, tweeting, you can still send in your replies. The answer will finally be revealed at the close of the show around 11:45 a.m. So yeah, those of you who want to still participate are welcome to post their comments on our Twitter handle on ET Now Live. Moving on then, let's bring on board our guests. Aditya Makharia from HDFC Securities joins us right now. Morning, Aditya. Thank you so much for taking time out. Going by the numbers, the auto sales numbers which have been delivered so far, Maruti 1.6 lakh units, even Bajaj has done well. A tad bit of, a concern or a disappointment was only for escorts as of now. Were you expecting escorts to be below par or below expectations? What is your sense?
Overall the numbers are coming out quite well, and we've been seeing this trend playing out since June. So June we started seeing a recovery, and that picked up in July, August, and now September. I think with tractors, what happens is the numbers tend to be very lumpy, because September is a very big month for production. Therefore, there could be some other issues, which may have come in. I'm not really worried about them missing the numbers slightly. Overall, they have been delivering very well over the last 3 to 4 months, and we expect the trend to continue as well.
Okay, so there's nothing to worry as far as the trajectory is concerned, right? Because managements of companies like M&M and Escorts have also said that they don't see any problem in farm equipment sales, at least for the next, next few months or till 2022 to be precise. One of the managements had given this commentary. Nothing to be worried as far as tractors are concerned then, right?
Yeah, I would also request you to take a slightly longer term view. If you see the kind of reforms the government is introducing on the agri side, we know about the farm bills which have been passed. So these will bring in a lot of structural changes which will play out. So if you were to even take a medium term view on tractors and agri machinery, this segment will benefit from a lot of initiatives, both in the form of stimulus which the government is giving, and now also in terms of the reforms. So, next 2-3 years look quite good in my view.
Okay. How about PVs and two-wheelers, especially the ones which are in the premium to high-end segment? Yes, right now is, something that is an exception of sorts. The festive season, October, November are likely to be relatively better. The sentiment typically is quite good as well. But going forward, after the seasonality factor, the festive period is over, how do you see things shaping up? Which segments could perhaps see some weakness, or which companies, if any, that you would like to flag off that one should monitor closely?
Sure, what we are seeing is that there is definitely good demand at the entry level. So, if you look at Maruti sales, the entry segment has grown at 35-40%, maybe even higher. So that segment continues to do well. When it comes to the premium side, if the recovery were to take place, yes, premium segment will obviously come back. However, I would just like to flag here that there is competition which is building up. So if you look at the launch by Honda yesterday, the premium bike they've launched, which will be in the 350cc cruiser segment. So we are seeing that the competition continues to come in, and that could, impact volumes for players at the overall aggregate level, But in terms of growth, if there's a recovery, everybody will benefit.
Okay. What about the premium segment? Of course, entry level is garnering a lot of traction, especially now that personal mobility has really become of utmost importance. But the premium segment, especially for instance, a Honda entering a 350cc segment at this juncture, is it a good idea for companies, for OEMs right now to push their premium models? Of course, from a financial standpoint, it augurs well for them. But from a demand standpoint, will they be able to generate enough demand, enough excitement among buyers right now?
Sure. So like you said, the festive season is the best time to launch any new model. Whenever there's a new launch, it's always exciting. So in the initial phase, companies pull through with their new launches. Going forward, I think the way companies approach their launches, or the way they approach their products, is they take a medium-term view as to how the demand potential will be over the next 2 to 5 years. So from that point, Honda, with its new launch, is laying the seeds, for what can be potentially a lot more models which will also come in. They've got the exclusive high-end brand outlets now, and I'm sure they will want to launch more products as well.
Okay. Now that we've concluded the second quarter as well, Aditya, what is your sense on the way we are headed in terms of recovery for the company's performance and in terms of demand? By when do you see things stabilize in your view?
Right. So the auto sector has surprised on the upside when it has come to the demand. As we discussed in the beginning, the requirement for personal mobility in this COVID environment has enabled the auto sector to really, move through the downturn and come out with pretty positive numbers and positive surprises. I think things from here should stabilize, as Unlock 5 is happening across the country, and we are also seeing rural remaining resilient. I think, the demand trend will continue to hold up.
Many thanks for joining us and for talking to us about demand scenario. Very important to watch out how it plays out during the festive season and what lies ahead. Thank you once again for touching base with us this morning. Let's see how the others numbers play out for the month gone by, and if any commentary, any interesting guidance is coming in as well ahead of the festive season. But for now, let's shift gears and let's once again focus on the biggest voice on the channel today, Rakesh Jhunjhunwala. He gave us his insights on the pharma space as well. Here's what he said.
I think growth highest will be in India. But I think that the section of the companies which are catering to India are now very well valued. While the companies who are doing the API and the generics, I think will have both earning expansion and PE expansion. Whereas for the companies focused on India, there will be earning expansion, but I think there is scope for limited PE expansion.
Welcome back. You're watching Buy Now Sell on ET Now, and let's get on board our guests for today. It's Kunal Bothra and Sharmila Joshi. Thank you. Good morning, and thank you, Kunal and Sharmila, for standing by. Kunal, I'll come first to you. What are your high risk and your low risk ideas for a viewer for today?
Well, it considers both on the banking stocks, and I believe that Bank Nifty could probably see a decent turnaround from here. We've seen some good breakout. Even if you look at retracement of the recent fall from 25,000 to 20,000 odd on the Bank Nifty, that could probably result into the index coming across to 23,000 plus level. So I think on the back of it, I'm suggesting to buy calls. The first one is one in ICICI Bank. I think that stock is now looking attractive. We've seen the leadership coming back into the banking pack, and especially from the likes of ICICI Bank. So that's the first buy, which I would suggest for a target of almost 390. Stop loss to be kept at almost 356. And the second would be one Axis Bank. I think in the similar line, I think even Axis Bank is forming an inverse head and shoulder pattern. It's more visible on the RE time frame. So both of these are moderate risk kind of ideas. But I would believe that both these banking names could move up higher. Axis Bank is also a buy. Short-term targets I'll place it to 475, and stop loss to be kept at 425.
All right. And Sharmila, what are your high risk and low risk ideas for the viewers?
Well, the low risk idea is from a very obvious sector, that is IT. I think that there is one sector that we've seen that has sort of consistently held its own in this entire volatile sort of period, then it's IT. And in fact, it looks like they would in fact gain from this pandemic sort of situation with the increased technology that is driving our lives today. So I'm going with Infosys. We would be getting their numbers soon, and I think that this is a stock that you need to have in your portfolio. The high risk idea is actually Bajaj Finance. Once again, here I think that what you would really wait to see is how we really react to the developing situation, and do we in fact go ahead and cut interest rates, because I think that could play out as a huge positive for various stocks in this space. And again, I think if you look at the kind of auto numbers that we are seeing today, that also shows buoyancy. So I think if that buoyancy is accompanied by the buoyancy that we're seeing in buying is accompanied by a lower interest rate, then I think it will just sort of fuel that buying further, and that could mean better things for companies like Bajaj Finance. So Bajaj Finance it's a slightly high risk idea because it's sort of been doing well. But I think if things play out, then there is potentially a higher upside in the stock from current level.
All right, thanks for your picks as well. Let's address some of our viewer queries as well. First up, we have Yashoda writing to us on Twitter. She wants the long-term view on L&T. She has 400 shares which she bought at 1,316 rupees a piece. 1316 was the buying price, and long-term is the time horizon. Kunal, would you like to commence with your technical view on L&T?
Well, I think you should hold. So I think the viewer is very clear that the holding period is long term. I think in that regards, I think it's a good quality stock. When you're looking at India growth story, we've seen how L&T performs whenever you've seen the indices going to multi years of stable uptrend. It generally has a correlation of more than 70-75%. We've seen that correlation panning out in the good part of 2016 to 2019 kind of a 2019-20 kind of a rally. And I think in those aspects of bigger trends of the markets, L&T tends to move in sync with how the broader or the benchmark indices tends to move. Now the stock is at 900 levels, and you purchased that I think approximately at 1300 plus. Then I believe as an ideal strategy, what you should be doing is you should be looking to average at current levels. I think the stock is trying to find some good support levels on short-term charts as well. There are some bullish patterns on L&T, which probably indicates that you might see a trading pop of 5, 6, 7% in the very near term. But those are very restricted towards short term. But your view is more on the long term, and which is why I would suggest a hold. And as a strategy, I think at current levels of 900, I think it's an attractive buy where you should look to average and bring your net cost price lower.
All right, so that's the verdict. It's a hold from Kunal. Sharmila, what's your sense on L&T, the fundamentals, and more importantly, the buying price where she's entered 1,300? Should she stay put?
Yes, I think I would concur with Kunal on this, that this is a hold for me, especially since the horizon is long term. I think what we need to keep in mind here is that, at this point in time, the government is trying a lot of things to get the capital cycle, capex cycle back on track. And this will mean good things for capital good companies like an L&T. And within that space, we must admit that L&T is sort of one of the top companies that there is. And if there is any benefit that if you are going to see the cycle getting revived and the spending coming back, then they'll obviously be one of the biggest beneficiaries. So yes, as you suggested, the buying price is a little high, but I guess it was sort of very difficult to envisage at this point in time that we'd be in this situation. So that being said, if your view is long term, I think for me the stock is a hold.
All right, that's the view coming in from both of our experts for L&T. But our viewer also, Yashoda, has another query, and that is she's bought about 50 shares of Bajaj Finance at the price of 3,175 rupees per share. Wants to know what's the long-term view and whether she should average the stocks. Kunal, I'll come first to you. What's your view on Bajaj Finance for a viewer?
So I think there are a lot of points to ponder over here. So Bajaj Finance, of course, there are no two doubts about it. That's a quality large cap name in that aspect. So yes, it warrants a hold in the portfolio. But then you have to the second part of the question which you asked, that whether you want to average. So you have to understand that whenever a stock goes through a corrective phase, I think that's the best time to try and average the stocks lower. Now, right now, the NBFC stocks are seeing some bit of a rally. I think Bajaj Finance and many of these other finance stocks in the last 1 week, 10 days have seen some good rally, good pickup of pace in price action. But I believe that it's better that you try and average the stocks when it is down 10, 15, 20%, or at a certain level where you are comfortable buying the stocks at lower level. I think the prospects for the NBFC stocks in the near term may look a bit choppy. They may look a bit volatile, but over the long term, I think I would be of the belief that these NBFC stocks, they should continue to show some very strong upside trend. So yes, the March rally could have dented the near term prospects for many of these NBFC names, but I believe effectively and eventually these stocks will continue to move up higher. Now the question is that whether Bajaj Finance can replicate the same kind of the trend which it had shown for the entire decade. I think that could be in a bit of that could be a bit of a disappointment, because what you have seen in the last 8-10 years for the stock to try and perform, given you multiple X returns, I think that pace may probably slow down for some more time. So yes, it's a quality stock which you should hold on, but don't have extremely high expectations, at least in the very near term. So I'm talking of the next maybe 6 months, 1 year to 2 years kind of a time frame. I think the stock will go through a gradual recovery. So use any kind of a major corrections as a good point where you can average out and bring your net prospects lower.
For Bajaj Finance, Sharmila, what's your view coming in for Bajaj Finance? Definitely, it's been under pressure this year as well as in the last 1 month or so. If you've seen the performance of the stock has not been that great. So, what should our viewer do with Bajaj Finance as of now?
Well, I've just recommended it as my high risk idea. So obviously, I think this is a stock that I like. And in fact, both the stocks we've discussed so far, I think both Larsen and Bajaj Finance could sort of be potentially slightly high risk ideas to buy at this point in time. Why high risk? Not really to do with anything of the quality of the company, but just in the hope that business visibility pans out for them the way we are hoping that it will. For Bajaj Finance, as I said, when I spoke earlier, again I would agree with Kunal that there's no point in trying to average it, because the stock has run up in the recent past. Try and buy it on dips and wait for these positive things to play out for this space in terms of interest rate cut, etc. Similarly for Larsen, I think you're expecting a lot of things to play out over the next 6 months or so in terms of capex cycle recovery, etc. So that's the play. So I think both are stocks that I like, and both Larsen, in any case, I've already said a hold, and I think for Bajaj Finance is also a hold for me.
Okay, so Sharmila continues to give it a thumbs up, both the blue chip names, L&T as well as Bajaj Finance. Moving on to our next viewer query. It's in the form of an email. Ishwar Garg writes to us from Ahmedabad. He's bought shares in Godavari Power at 303 rupees a piece and wants to know whether he should be adding more at this juncture or buy on dips. Kunal, your view on the chart of Godavari Power?
Well, I think it seems to be like a good mid cap name. I think the last 5-6 months, it's done pretty well for itself. I think it's trading at around the same levels where the investor has purchased. It's come back to a 50-day moving average as well. So that's the mean reversion process seems to be completed. The stock has not gone through a major price correction. I think it's gone through a time correction in the entire month of September. I think maybe a couple of weeks prior to that as well. So I believe that these are good signs. Which you require from a mid-cap name, and you can continue to hold. I think the fact that the stock has completed a mean reversion process itself indicates that the stock would now be anytime ready for continuing the uptrend. So I would recommend a hold on Godavari Power.
Sharmila, do you concur with the view?
Yes, I do. I think what we've seen in Godavari Power is the results have been slightly muted in this last quarter. But what has also been sort of a positive for them is the fact that China has turned net importer of steel, and which this also means is that some of the raw materials required are getting sold, exported. Pellets, for instance, which is something that Godavari Power is in. So yes, I think with that, with the overall outlook being the way it is, they haven't suffered too much because of this, the China piece playing out reasonably well for them. So yes, I think the stock is a hold for me.
All right, and that is the expert's view coming in for Godavari Power. And with that, thank you, Kunal, as well as Sharmila, for joining us on Buy Now, Sell Now, giving us your trading ideas as well as resolving our viewer queries. And now let's get you a slice of that exclusive interview that we had with Rakesh Jhunjhunwala. In the exclusive interview with Nikush Dalmia, he spoke about which are the sectors that will outperform in the long run. Listen in.
That when the economy does well, right, it is anybody who has a deposit franchise who will survive and grow. Because how can you lend if you don't have a deposit franchise? So it's a deposit franchise. So therefore I feel the public sector banks also, some parts of them will do well because they have good deposit franchises. So it's only a man who can garner deposits who can lend. So I don't think those banks are going to easily see. Consolidation is a natural process of economic evolution and growth. So that may happen, but not necessarily they will lose market share.
What role do you think technology will play? I saw a tweet from Uday Kotak. He says, look, the future of the world is with fintech and banks which have technology and platform. Should we brace ourselves for that?
Well, I think most banks are already using the technology which fintechs are using. Today, I can open a bank account without going to anybody from my house. I can get a loan sanction from a bank sitting at my home. So I don't know how fintech is different from a bank. Please ask Mr. Kotak.
Now, pharma is the only sector, Mr. Jhunjhunwala, where we've seen a EPS expansion and a P expansion. Is it a coincidence that it has only happened after the COVID crisis?
I don't think the COVID crisis has caused the P expansion or the EPS expansion. But I think I don't think COVID has caused it. It was overdue. I'm shouting from 2 years. I was 2 years early.
Welcome back. You're still watching Buy Now, Sell Now on ET Now. Before we go any further, here's a quick reminder for all of you who still can participate in the BNSN Daily Quiz. Today's question was, which of these stocks has the highest number of buy ratings from brokerages? Options being A, ICICI Bank, B, Airtel, C, SBI, and D, IndusInd Bank. So quickly, you can log into Twitter and follow us on ET Now Live and give your replies. We will, of course, address them before the end of the show, rather. Okay, let's move right on then and get you an update on what's happening with the multiplex stocks. Look at the way they're on fire. PVR, Inox Leisure. Of course, we had the government issuing some regulations and approval to open up gradually in non-containment zones this month onwards. Avan is standing by to tell us how is it likely to pan out for these biggies, PVR and Inox, and the entire sector overall. Avan, take it away.
Well, multiplex stocks like PVR and Inox are having a field day in trade on the back of the Unlock 5.0 regulations that mandates from the center that multiplexes will be allowed to open with 50% capacity in non-containment zones from the 15th of October. After being closed for virtually 6 to 7 months, this is going to come as a huge breather for the multiplex companies. Now, essentially, the INB ministry is going to issue an SOP, or standard of procedure, for all the rules and regulations that have to be maintained. Analysts say that this is coming in as a huge positive, and multiplex stocks will be on a tear on the back of this. As of now, no large-scale content or big Hindi films, they believe, will hit the cinemas soon. And it's also going to be a positive for retailers, as the box office is going to be a key driver for this with respect to the opening. Going forward, we spoke with the management of PVR as well as the Multiplex Association, Kamal Gyanchandani, who says that Tamil Nadu and Maharashtra will not be reopening cinemas till the 31st of October. They are, though, in touch with several state governments for the reopening, and that will be positive. So he expects that by November first week, across the country, we will see multiplexes reopen. As of now, the government will be revisiting that cap of 50% in the next 6 to 8 weeks basis the coronavirus pandemic situation. He is confident that we will see veterans come into cinemas, and that now the new rules is going to be mask compulsory through the film, empty seats in between. There will be digital transactions that will be encouraged, gaps between the show timings, and they will be moving to disposable packaging for F&B, and of course very strict social distancing. He expects that big bang films like Suryavanshi, 83, the James Bond film, as well as big Tamil films could be released around November or during Diwali. But for all in all, a big positive for multiplex stock.
All right, and that is why PVR and Inox Leisure is buzzing in trade today. And let's move on and to an 18-hour exclusive. The long-awaited scrappage policy is in its final and most crucial stage. So after car makers have agreed to give 1% discount on vehicles purchased after scrapping old ones, the centre has now approached the states to provide incentives. Utkarsh is here to take us through all the details. Utkarsh, you've been tracking this for a while, so tell us, what is the demand from the states and what exactly are they saying now?
Exactly. So where is the scrappage policy now? Obviously, the structure is made. What is important is the incentive. Who will shell out the money when you are scrapping your own vehicle? Who will incentivize it? Firstly, it went to the automakers, and the government said that the automakers should incentivize it. They went ahead and said, we will give you 1% discount on every vehicle which is brought after scrapping your old vehicle. Now the ball is in the court of the government. And now this time the government has reached out to the state government saying that the road tax at this point of time should be subsidized if we cut the scrappage. If we are buying any vehicle we're buying after scrapping the old vehicle, there should be a cut in road tax. Now the road tax at this point of time varies a lot, from 6% to 18%, from tourist vehicles to non-tourist vehicles, from big vehicles to small vehicles. But there is a cap which the state government is really looking at. But what Union MORTH is telling state government is that there will anyhow be no loss, given the fact that the demand will increase once scrappage policy comes in place, when people will scrap their old vehicles and buy the new vehicles. The demand will still be there. States, however, are not very sure of the fact, and they have asked the centre that give us some compensation, give us some surety that if we make losses in road tax collections, then you will go ahead and compensate us. Now, on this, there has been already one round of meeting between the Finance Ministry and the Ministry of Road Transport and Highways, and we are waiting of this dialogue to end. Post that will come the dialogue of what will the centre do. So we're done with the automakers giving discount. Second is the state government, and then will be the central government. So still, there's at least, if nothing, 25 to 30 days for the scrappage policy to come. And these are the most crucial aspects that needs to be finalized.
All right, Utkarsh, thanks much for bringing us those details. And we at Buy Now Sell Now have been asking you which of the stocks has garnered or does have the highest number of buy ratings from brokerages. We gave you a couple of options as well between ICICI Bank, Airtel, SBI and IndusInd Bank. And the stock with the maximum number of buy ratings from brokerages is ICICI Bank. On that note, slipping into a short break. Thank you so much for all those who have been tweeting to us. We're slipping into a break here. Plenty more on the other side. Stay tuned.
Welcome back. You're watching Buy Now Sell Now. An ESG fund, ESG investing has gained a lot of attention worldwide, and the popularity is also it's also gaining popularity in India as well. So to understand more on this, on the Money Show, we spoke to Mrinal Singh of ICICI Prudential Mutual Fund. Listen in to what she had to say.
We have been seeing for last 4-5 years that more and more customers, more and more regulators, more and more lenders, more and more investors are asking of them what is that they are doing for the society, how are they contributing to sustainability of resources, how are they dealing with stakeholders on the governance part, and that includes not only shareholders but also vendors, customers, employees, ecosystem and the likes. So we've seen that of late from beginning of good to talk about things, it has kind of become a eligibility requirement to potentially participate in a tender, to potentially participate in a business opportunity and likes. Now, in fact, a lot of people in India would have noticed that in the last budget, the government of India also introduced mandatory CSR spending for corporate out of their profits as a percentage. Now that's in a way umbrella within the ESG itself. And we are seeing, a lot of issues and concerns being raised by society in general regarding a lot of way the businesses are conducted. That includes governance and not only environment. And it also includes the sustainable part. And there is a myth around ESG. A lot of people think that, it's good to talk to and what's so great about investing.
Okay, with that, we're timed out on this edition of the show. So we're going to wrap it up real quick. Thank you so much for tuning in.